Hi there, my name is Maru, and I want to share with you what it feels like being a part of the Ahmed Trading Forex trading community. Before I even say anything, I want to make a comment about the live trading session. It's my favorite part because I made profits and some losses, but this helps me psychologically and makes me understand better the risk and money management that was much emphasized during the training. Honestly, before joining this community, I struggled with Forex trading, often losing more than I gained. But their approach to Forex trading changed all of that. Although I stay far away, but the flexibility of their online program suits me very well. It didn't take long before I realized that I had a bad trading strategy and I was taking too much risk. They don't just teach you how to trade, they teach you how to think like a successful trader. The emphasis on risk management and discipline strategies has been invaluable in my journey. Thank you, Ahmed Trading.
Hello everyone, welcome to Ames Trading Webinar, your pathway to financial freedom. So this part, we are going to divide it into two. As you can see on the flyer, we have two speakers, which is me, Chano, and Mr. Benga Olatunji. Alright, so I will start by introducing iTrade to you and see how you can leverage with iTrade. So talking about let's start by talking about iTrade, right? So iTrade is one of Ames trading products, right, that we've used to teach a lot of people to trade in the global financial market, right? And not just that, iTrade have helped a lot of traders too, and that is why we are here today talking to you about iTrade. And this webinar is going to be like the first of its kind because we'll be talking about iTrade and also trade live with you. So this session is going to be a trade live session. And as we proceed, we'll see how we can do that. So once again, welcome to iTrade, where you learn the global financial trading. iTrade is your pathway to profitable trading in the global financial market. Now, there are other benefits apart from you trading in the global financial market. There are other benefits that you should know as you trade, as you join this iTrade. Now, to be clear, this webinar is not to talk about what is forex trading, forex hierarchy, buy limit, sell limit, how to put stop loss and take profit. No, this webinar is not about that. This webinar is for traders who have been struggling to make massive profits in the market, and we will want to show you proven strategy that can teach you how you can earn in the global financial market. So this webinar is not for a newbie trader. So but if you are here as a newbie or as a forex trader, you can also leverage the opportunity that we give out in the eye trading session, right? First, with our iTrade, we've been able to build trader skill for them to trade confidently in the global financial market. And apart from that, we also give them access to fund, right, to trade as a light as an arm's trading expert, right? So this is not like a prop firm where you need to pass an account for you to get access. No, this is not a prop firm. This is Ames Trading offering you access to funding after you pass through some of our terms and conditions, obviously, and you know how to trade, and then you can give you this access to fund. Another beautiful part is that you can also earn globally. What this means is that once we set you up as a forex trader, we are going to connect you to a platform called Light Finance Platform, a reputable broker where we position you as a global trader and you get people to copy your trade all around the world, no matter where they are. So you position yourself there and people start copying you and you earn globally. So this is what iTrade offer. We've talked about three things that we offer. First, we build your trading skill, we give you access to funding, you earn globally while we position you as an expert in the Light Finance platform, right? This is what iTrading offer. Why should you even join this iTrading? There are a lot of benefits. I just mentioned about theory. There are other benefits like you getting access to our premium free trading signal where you get weekly signal that you can trade and you'll be making profit. We also talk about our live mentorship. This is what you'll be doing shortly. There you get to ask your question. It's a purely trading session where you get to ask questions, forex related question, and every of your concern or question will be answered. And we also mentor you to become a light finance copy trading expert where we position you as a global trader and people around the world will copy you. And you also have VIP access, invites to our trading event. So Ames Trading, we do organize events from time to time. So when you become part of our iTrade, you get access to these events and attend and network with other traders. And also we also give you promotional materials where you get to trade, promote yourselves, and we also promote you too. So if you're a good trader, you make profit, we get to refer you, promote you, and people start copying you. And we also provide you with promotional marketing material that can help you so that a lot of people will get to see you and copy your trade and you make profit. So this is why iTrade really stand out. This is not just an opportunity. This is a life-changing opportunity that you can leverage on right now for those who are not already in the art trading community, right? So when you are in the art trading community, we give you education, we give you mentorship, we guide you for you to trade with confidence and also help you to grow, right? So for those who have not joined the iTrade yet, we have categories of courses that can help you leverage on this. We have iTrade Masterclass, which you can get for a self-paced video lessons where you can watch. We also have group iTrade class, about 6 sessions. Whether you want it physical or you want it virtual, you can also register for this iTrade course, right? We have offices in Abuja, Port Harcourt, Benin City, and even Lagos, right? So if you also want a private master class, which is like 8 sessions for 1 month, a one-on-one virtual or physical class, you can also register for it. And apart from that, we also have some special courses like stock special course, about 4 classes. We also have features like gold, silver, crude oil. These courses will also set you up to trade in the global financial market. So if you're interested in that, that is also fine. You can also reach out to us, right? So let's talk about why we are here. This webinar, like we said, is going to be a free live trading webinar, and we'll be doing this every month, where you get to learn practical lessons, interactive class, and also insightful sessions where all of these marketing strategies in the forex market will be highlighted, right? So as a trader, take your notes, take your pen, document every session you want to document, because this is an opportunity for you to learn in the financial market. So as you see in the flyer, we have 2 speakers. Like I said, I myself, I just introduced to you what iTrade is all about, and we'll be taking this class further as we invite Mr. Latuji to talk about that. Before you speak, what you need now is for you to enroll in the iTrade. I just highlighted the courses that you need. Then you gain access to funding and mentorship and also exposure. After that, on your own, with our guidance, you can trade, earn, and grow, right? This, like I said, is your pathway to financial freedom. So without further ado, let's welcome Mr. Olatunji Gbenga, a forex trader who has been trading for more than a decade now. So he have wealth of experience that he will be sharing here on our live trade session. So document your questions at the end of the class. He's ready to take all your answers. So thank you so much. Let's welcome Mr. Gbenga to take over this live trading session right now.
Thank you, Mr. James. Good afternoon, everyone. As I said, my name is Benga Olatuji. I'm a forex trader. Um, I've been trading for about 10 years, like you said. So I'm here to humbly share from my wealth of experience trading the global financial market. People call me Jack of all strategies, but I actually refute that name. I'm not a Jack of all strategies because when you say Jack of all now, then you start saying master of none. But then when it comes to forex trading, there are a lot of strategies. Actually, we have numerous strategies, and people will keep developing strategies daily. But the thing is, at the end of the day, are you making money? That is the question that you should ask yourself. Okay, you might learn a strategy, it might be working for that person, and you discover that why is this not working for me? But you said this strategy is 80% accurate strategy. Why is it not working for me? It is because you haven't gotten the right strategy that suits your psychology, that suits your your personality. So there are some people that they can't wait for long. They don't have that patience. You can't tell such a person to learn a strategy that will require him or her to wait for 2, 3 days before taking a trade setup. So that is one of the ways we get it wrong. So you might see someone doing well with a particular strategy and you are not doing well with that same strategy. It doesn't mean the strategy is not working. It is working. It is just that it's not working for you. Okay. So this live trading session now, we're going to be looking at different pairs, and I'll try as much as possible to utilize different strategies, how a price action trading strategy would have worked for a particular trade, how SMC might have worked, ICT, and all. So if you have your MetaTrader 5, MetaTrader 4, C Trader logged in, we might be able to get 1 or 2 trades. It might be a limit setup, it might be a pending order, and it might also be a market execution setup. So let's dive right into it. This is Euro USD. I'll be starting with one of the most common pairs. The forex trader, you know, Euro USD, GBP USD, those two are very common, the most traded pairs when it comes to the forex trading market. So let's look at this. The first thing, as a forex trader, the first thing you should establish is what is the structure of this particular pair that I am working with, or the pair that I want to analyze now. The first thing you should know is what is the structure. When we're talking about structure, we won't have the time to really dive deeply into structure, but you need to understand that structure is very simple. When you say structure, theoretically you have something like this. If you have been attending some of our sessions, you must have come across me explaining this before. So when you have something like this, it is relatively easy. If I should ask you, what is the direction of pricing? Is it going upward or is coming downward? You tell me, oh, this is going upward now. Fine. And if you have something like this, if I should ask you, is this heading downward or is heading upward? You tell me it's heading downward. Now, fine, you got the direction right. You understand the trend. This is an uptrend, this is a downtrend. But the next question is, can you be able to understand what the structure is saying? That is where it gets complicated. But in the effort to simplify trading, like we do at Amage, All you need to do is when you are marking your lows in a structure, mark the lowest point where price got to, and you mark the highest point that price got to. That is the simplest way for you to mark your structure. So if I mark this as low, I'll mark this as high, right? Now, if I'm looking at this next low in relation to this last low that was created, you definitely agree with me that this is an higher low. It is higher than this previous low. So that is why we call it higher low, right? Now, for you to continue this bullish structure that we have now, because we said this is an uptrend, and when a trend is called uptrend, it means it's a bullish trend. So for us to continue this uptrend, it means this last high that was created must be broken. Okay, so now this higher low that we have here must break this last high to create a new high. So this new high that was created, if we should compare it with this last high, you tell me that this high is higher than this one. So that is what we call it higher high. So that is the simple way of marking your structure. This is for a bullish structure. Then this next low too, it's an higher low. So by the time price creates a new high, we call this higher high because it broke this last one. So that is for a bullish structure, right? To simply explain a bearish structure as well. So you have this. For this one now, you call it your high, and then you call this your low. So for us to have a bearish trend, you must ensure our price must be showing you something different from what the bullish structure is showing. For a bullish structure, remember we are creating price was creating higher lows, higher lows, higher highs, which means these lows they are being protected, while these highs they were being hunted or taken or cleared, whatever English you want to use, to create a new high. Price came again to create a new low. Remember, price didn't take this low, which means this is protected. Another word you can use for higher low, you can call it a protected low. That's in a bullish structure, all right? So these two broke this. That is for a bullish structure. Then for a bearish structure, the highs will be breaking the lows instead. So if you compare this low now, this new low that was created after breaking this one, you tell me that this low is a lower low because it is lower than this previous one. This high is a lower high. So that we won't waste much of our time, I believe we understand the concept I'm trying to explain here. So we're going to make use of that while trying to analyze what Euro USD is trying to do here. We understand the basics of structure. For bullish, higher lows, higher highs, higher lows, higher highs. For bearish, lower lows, lower highs, lower lows, lower highs. Now, if we should look at this structure we have here, if I should ask you, what kind of trend is this showing right from this very top? This was the highest point that price got to. Now, this high, it was this low that created this high. This low right here created this one. So let's start from this structure. So if I should ask you now, is this still a bullish structure? Definitely you must tell me that it is not. Because at the end of the day, remember for bullish structure, let me illustrate it here again. These lows must be protected. This low must be protected. This next one also must be protected. That is, price must not break below this low. But if you look at this, you discover that price did what? Broke below this particular low. This is where we call a break of structure, which means from this bullish structure that we had initially, price has broken the last low that was created here to create a bearish structure. And from there onward, we started seeing after this low was created, this was the low, this is the lower low now. Then the highest point that price got to while retracing, we call this the lower high. So this lower high too broke this low, and then price created this last low. So this was the lowest low that price created. We call this the lower low, right? And then we created this again, lower high. So from this lower high, what are we expecting from price? We're expecting price to go ahead and create what again? Another lower low. So what will you be looking for? If I should ask that question, based on what we just analyzed now, since we already agreed that this is a bearish structure, right from here, inside the bearish movement. So if I should ask now, what do you think we should be looking out for? based on what we just analyzed from this structure? Who can tell me? Just drop your answer in the comment section. Is it a sell or a buy? What do you think we should be looking out for? I want this to be as interactive as possible. So just drop your answer in the message box. I'm waiting. You think we should look for sell or you think we should look for buy? Remember, this is a bearish structure. And for a bearish structure, you should look for okay, I think I know what will happen now. You know, in some classrooms, there are some students that actually they understand what we are talking about, but they won't want to speak. So, okay, Mr. John, yeah, that is sell. Sharon, yeah, it's a sell. Now, one thing about forex trading that will first make it easier for you as a trader is following your structure. Okay, most times when price is bearish, when price is selling, we tend to start looking for buys. The structure is sell. Then why are you trying to buy? It's just like a knife that is falling. Then you want to catch a falling knife, it means you're going to injure yourself. That is what is going to happen. So for a price that is falling and you're trying to buy, it means you get injured. So for the fact that this price action now is telling us that this is bearish, it means we should look for sale. Now, this is a typical SMC labeling of structure. Now, for simple price action traders, let me remove all these labelings. So I want to explain to you now how simple price action traders look at price. What do? We connect the highs like this. The last two high that was created, you know, if you're drawing a support, we call it support and resistance, right? If you're trying to draw a support or a resistance, you must connect at least two highs or two lows. So from this now, we have this high and this high. So clearly, this is a bearish for a price action trader. They don't really look at, you know, the lows, the highs in a way SMC traders looks at lows and highs. Okay, so all they are concerned about is what is the direction of price. If price is bullish, they will connect the lows, and if price is bearish, they connect the highs. So in this instance now, we'll connect the highs. So this is telling us that price is bearish. Is it not the same thing as what we just analyzed with SMC now? Definitely, it is the same thing. Now, let's go further. This is a 4-hour time frame. For you, let's say you're an intraday trader. What do I mean by intraday trader? Traders that, you know, tend to take trades and close that same trade within the same day. So you take a buy on, let's say, GBP USD today. You are hoping to close that particular trade today as well, or probably just hold it for 1 or 2 more days. We also have other type of traders. Probably you are a long-term trader now. Such a person now will be working with a very high time frame, weekly time frame, daily time frame. But for intraday, I want to take my profit today. I like money. I want to enter a trade and be able to close today or probably close tomorrow. So I focus more on the daily, the 4 hour, the 3 hour downward. That is how I do my analysis. Multi-time frame analysis is what it's called. So let's look at this is 4 hours now based on recent structure. Now, remember when I was talking about structure, I said structure is still diverse. We have something called primary and secondary structure. We have, you know, internal and external structure, but time will not permit us to, you know, dive deeply into that. Okay. So now, based on recent structure, what do I mean by recent structure? The most recent high that is created. That is what you want to work with as an intraday trader. The purpose of us labeling all this is just to confirm the direction of price. What is the structure? What is the direction of price? We already established the fact that it is bearish. So now, how can I get a trade? How can I enter this particular trade now? Is it where do I enter a buy if I want to buy? Where do I enter a sell if I want to sell? So based on this, the most recent structure, you agree with me that this is the most recent high and the most recent low that we have. So some people call it daily range. So this is the range that we are working with. This high and this low. Anything outside of this high and this low is not none of your business. You're not focusing on any other thing. We're focusing on the recent structure, this low and this high. And remember, this high did not break above. We have a protected eye here. This eye that broke this low and led to the creation of this low. And then we have another lower high. And this lower high definitely is going to, create a new low. Let me not say definitely, most likely. Because when it comes to Forex trading, it's a game of probability. Even your best setup might still fail. So now, how can I get into this trade? So from 4 hour time frame, I want to see something, clearer. I'll go to probably the 3 hour time frame. You can switch to 3 hours. If I want to sell as a price action trader, I have my resistance level. As a price action trader, you mark your resistance and support. And we all agree that we're going to be selling this particular Euro USD based on our structure, right? So the next thing for you to do is to mark your resistance level. You have no business with your support level. Even if you are saying support, the fact that you are saying sell means you should focus on looking for possible area of resistance that you can sell from. All right. So based on that, I'm going to mark this as my horizontal resistance level. Why am I marking that level? Because from here you can see a push down. Price came in again, I can see another push down, which means there's a possibility that if price approach this level again, I'm still going to see another push down, which will lead to a sell. Okay, that is one possibility. Now, for trend line traders, there's still price action. You can draw something like this as well. You have this eye and this eye connected as a trend line resistance. Now, if you look at this very well, you discover that we have this trend line resistance and this horizontal resistance around the same zone. We have same zone, which means I can work with either of these two. I believe you are following. So, which means you are very right. When you are analyzing and you're seeing your zones, you have horizontal resistance or trend line resistance falling within the same area. That should give you confidence, enough confidence that yes, this trade is going to go right. That is not to say 100% your trade is going to go right. So based on what we analyze, number one, our recent structure is bearish. Our overall structure is bearish, right? I have my horizontal resistance, and at the same time, I have my trend line resistance here. So what is this telling me? This is telling me that I should look for a sell from or around this particular level. So that is why for me now, the next thing is to wait for price to approach this level. Once price approach this level, I'll be waiting for what I a candlestick confirmation. That is, I'll be waiting for a bearish candlestick reversal pattern. So it might be a doji, it might be a bearish engulfing, it might be a bearish hammer, whatever reversal candlestick pattern you prefer. Okay, so as soon as price gets to this level, that is when I'm going to involve myself in the sell and then target this low. Your entry may also be from this trend line resistance. Like I said, it has to be based on confirmation. But for this one, I will be setting my limit order on this. Now, why am I targeting this low as my take profit? Why? Because remember when we're looking at bearish structure, we said price will keep creating new lows. We had this high, this low. We broke this to create a what? A lower low. We create a lower high. We broke this one to create a lower low, a lower high again to create it. So one thing that is constant is these lows will get broken. So I don't know where price will get to. Price might just take this out and reverse. Price might sell very low and reverse. I don't know that exact point that it's going to reverse for. But one thing that is going to be sure if you are selling is this low will get taken. That is why it is as important. Having a precise exit is as important as having a very good entry. So because we had this very good entry, doesn't mean I can just decide to hold my trade till I'm tired of of selling. All right. So this is the most logical point of exit where you can set your TP. So for this now, you have identified you can set your sell limit on this particular trade. That is for Euro USD. So let's proceed to check another currency pair. This is not going to be a currency pair anyways. I have a lot of people always asking me, please check gold, please check gold. We all love money. So let's look at gold. Now, gold is there is this strategy I use for trading gold. Like I said, they call me uh multi strategy trader, but it's actually not about different strategy. It's just about reading price. Okay, understanding what is the characteristics of this particular pair that I want to trade. That is why you have some people, they don't trade any other pair aside gold. Some it is GU. So for me now, when I'm trading gold, I actually don't involve myself in selling. All this sell that's been happening since 28th of October, I've not been involved in one single sell. Why? Because when it comes to gold, gold most times for a very long time is always going to be bullish. Look at it. Right from this year, we've always been bullish. This is that was April. Think we started somewhere around there. If you're looking at this, you can see price will always continue moving upward. Even though price will still sell, it's just like when price of goods keeps going up. Even if it's still going to go higher, at a point it's going to have to it has to come down. There's a concept behind the fact that when price goes up, it must retrace a bit before continuing upward. Come down again before it continues upward. It's a very simple concept. Now, let me quickly explain how this concept works, especially when it comes to gold. When gold has been buying for, keeps buying for a very long time, just be prepared for a sell, and that sell we call it a pullback or a retracement. Okay, so because gold is selling now does not mean for a long time gold is going to sell. Gold on a long time, just accept the fact that it's always high. But then we cannot keep buying and buying. We have to, get some pullbacks or some corrections. Okay. Now, going into the concept of why we do have pullbacks. You see, when the big boys, the investors, the big banks, when they enter a position from here, they enter the buy position from here. See those big financial institutions that you have, they open positions like this. They don't just trade and close today. They open their, enter a position, they can close by the end of the year, next year. So it's always on a long term basis, okay? Now they enter the position from here and then it's moving well in profit. Let's say price got to this level. Now they are looking to have more positions to their trade. From this position now, they're already realizing a lot of profit. Now, they will never buy from the very top here. There is a concept called discount and premium. When price is at the highest level, we call this premium price. Okay? And when price is here, we call it discount. It's just like when you hear something like, Black Friday discount sale. That is when you see everybody rushing to buy. So the only time that the big boys want to buy is when price is at discount because it's always costlier to buy from premium. Look at the price here. If you look at this price, trace it to the right, you see 4,950. Now compare it to you buying from 3,969, which means by the time price gets to this initial level, you're already in profit. So that is why you see those big boys, they are now going to sponsor what we call a sell. They'll be the one to sponsor this sell. That is, they will forcefully push price down, wait for it to retrace into a discount price. But remember, they already have a position running. So they will make sure that this level is protected. That is why we call it a protected low, or like we call it in terms of structure, higher low. So that low is always protected. They will never allow price to come and take this level because it will mean that that position that was running in profit before, they will end up making nothing or you know um, incurring a loss. So they will ensure that this level is protected. So that is why as soon as price got to a level, gets to a level where they are comfortable with the price, then they hit another buy position. That's how they enter another position, and then price takes this out, create another high. By the time price create this one, they want to add another position. They'll wait for price to again trade into a discount, more discount price. They enter another buy position. Remember, this will also be protected. They will never allow price to take out this low. So that is the concept behind price retracing back before we continue buying. So now let's look at that concept in relation to gold. So when gold started selling, when gold was selling, the next thing for me, like I said, if price is bullish, you should look for the next support level where you can take a buy from. And if price is bearish, you should look for the next resistance level they are going to take a sell from. I mean, a sell from. So based on this now, as price was coming down, I already marked my possible buy position. This is daily time frame. For SMC traders, we call this black candle that you're seeing here, it's just forget the color of the candle. The white candles are the one going up. Those are the buy candles, and the black one are the sell candles. These are the sell. I mean, they are the sell one, right? So the last sell candle before an impulsive move to the upside, we call it a bullish order block. For those that they understand SMC. So we mark this as order block. This was the next possible position for me to take a buy from. That was when price was around here. Okay, before price got to this level at all. And then for normal price action support and resistance traders, this is also a support level, right? We call this S&R. You can see this black candle and this white candle now. They are almost neck and neck on each other, very close. If I should change this to a line chart, you discover that I have a particular low here. So this is a support level. That's another way you can mark a support level on higher time frame. You don't need to be looking for, oh, where's the low? Which one can I connect? There are some people that call it S and R, SNR. You see that SNR, you think is one big term. It is just support and resistance. They just want to use vocabulary and English to sell cost to you. It is simple support and resistance. So you can see it is the same thing, same level that SMC trader is looking at. That is the same level that you, as a support and resistance trader, is also looking at. So I entered the buy because yes, what will happen after price comes into your support level? The next thing is for you to take a buy. So I took a buy, but price eventually failed that level. That doesn't mean I was wrong to take a buy from here. Of course, I was right because this is the support level. But now, because price failed that level, it doesn't mean, oh, we can start looking for sale. Remember, the first thing I said when it comes to gold is I don't involve myself in sell. That is a personal strategy. I look for buy because buy on a long term is always very, very profitable. So after the failure of this particular level now, where is the next zone, next level that I ought to take a buy from? That will be this level. For SMC traders, the last sell candle before an impulsive move. This was the last sell candle before the impulsive move. So it means price what wanted to, take this level out, probably because a lot of traders were looking to buy from here. That's what happens sometimes. When the market sees that, oh, we have a lot of orders lying in, then the price takes out that liquidity. All right. So now the next level, I waited here for price to come again so that I can take my buy. But because I learned a particular lesson from the failure of this one, I didn't, get involved in this aggressively. You can be an aggressive trader or a confirmatory trader. Aggressive means once price approach your zone, you're not waiting for any confirmation, you just dive right into it. So for me, because I lost money here, I had to wait. I had to wait for this. Else I'll be losing my rent or my, probably money for food for 1 month. So I had to be very cautious, right? So it led me to now go to the lower time frame. This is where multi-time frame analysis comes in. Okay. So while price was moving yesterday night, so let's mark this low now. I will now go to the lower time. You see whether you're looking at price on 5 minutes, 15 minutes. So far you are looking at price in the direction of structure. You won't get it wrong. So it's not almost like, oh, let me sit down on 4 hour and wait. While you're waiting on that 4 hour time frame, I don't already make money, I don't run. You get the point. So let's go to like 4 hour and see. I want us to focus on this candle. Let's go back to the daily. What was happening? This black candle now before this one started formation. How I approach that particular trade, and then I'm going to show us the next entry that I'm waiting for. So you go to the 4 hour, nothing on higher time frame, but there was something I saw on 30 minutes. Now price started moving. I already marked this level. Remember, we marked this level from our daily time frame. Let's go again to check so that we can be sure that we got it right. You can see, like I call this is the other block. This is also a support level. Yes, it's also a support level. This level, you can see price was reacting. There was fight here. Price came down. Price came down. So this is also a support level. The whole of this zone is a support zone. That was why when price got into this level, it started buying. The same thing as SNC and price action trader. For ICT traders, ICT look at fair value gap. What do you call fair value gap? Let me quickly explain to you. You see this week, this last candle, it created a week here, and this one created a week here. But in between all this, we call it imbalance. That is, this order, the order we have here, was not properly filled. In a proper market setting, if you know economics very well, you must have buyers and sellers in a normal, proper market setting. But from this candle, what happened here was that we only had majority. What happened majorly on this particular candle was we had buys all through. Okay, so assuming this candle that happened here now, there was a sell, a sell, a sell, at least to cover the whole of this space before it now eventually buys. Then we say, okay, yes, we have a proper buy and sell. But the fact that price did not come at all to come and even sellers did not even taste anything from all these prices, it means there's an imbalance. So ICT traders now, they see imbalance as their own point of entry. Where SMC traders are seeing other blocks, they will pick this level, the start of that candle, the highest point here and the lowest point here. So they will place their entry in between this imbalance. They can pick 50% imbalance, they can pick the start of the imbalance. So an SMC trader, this will be SMC trader entry from this other block. But for ICT trader, their entry might be 50% filling of the imbalance, right? So, but yes, let's go back to what I was explaining, that I didn't actually enter that trade aggressively. So we are trying to understand how I got into that trade. So I was seeing something on the lower time frame. Okay, so because based on the daily order block, I discovered that yes, price is respecting this level. Price keeps going up. Now, the next thing for me is to find the next possible zone again, support zone that I can possibly get a buy from. Okay, if you switch to a line chart, this is another method I use to check for the next low that I can use for buy. You switch to a line chart, I pick this low as the next protected low, right? Let's follow the structure. This low created this one, right? This low broke this high to create another one, which means we're already bullish. Okay, price is reacting from our daily order blow. So what happened? Because of that, as an SMC trader, this was the last sell candle. I now mark this sell candle, the last sell candle before an impulsive move to the upside. That is your bullish order blow. Then I pick this as my buy entry. It is also the support zone based on what I just showed you on the line chart now. So that was how I got into this. Pick this as my entry. Then stop loss by this low. Remember, this low will be a protected low. The big boys, they won't want price to take out this their first entry. This is their first initial entry. They will never want price to come back here and take them out of this particular position. All right. So then I targeted this I as my TP. I think my low was somewhere around here. It was a 1, 2, 3 trade, 3 hour trade. So I woke up to profit and then ETP. Now, how am I trying to continue my buy? What is my next, analysis? It's going to be like this. I saw something on 3 hours. What did I call this initially? I call something when you have two candles like this, a sell and a buy candle neck to neck. both beside each other like this, is like a railway track kind of thing. This is a support level. You don't need to go to 30 minutes and be looking for reaction from a particular level. This is a support level. Why is it being called a support level? The fact that price came lower and then it got rejected, it means it got pushed back up. That means there's a support level bias. Buyers are there, preventing price from continuing lower. Price again attempted a push downward. What happened again? There was another push to the upside. So let's remove this so that we can see clearly. So that is telling you that this is a what? A support level. So that is telling me that this is the next probable zone for me to take a buy. So I already have a limit on this. So which, if you're also interested, I'll be placing my entry here. You can set a buy limit order on this. Now, where should be your next stop loss? Your stop loss can be here because this is now a protected loop. They won't want those big boys, right? That we call them institutions. They won't want price to come down and take out this particular entry of theirs. They want it to be protected, okay? But to be on the safer side, because you see this particular entry, I'm hoping to hold it on a very long term basis. All right. So, and then I'll target this as my TP. So that is all on gold, and that is what time will permit us to look at. So, like Mr. James informed us initially, for those that will be further interested in, probably joining the master class, you can always reach out uh, to the customer support. A number will be dropped after the training that you can reach out to, and they will onboard you and you can join us. Whether you're interested in learning SMC, ICT, price action, whatever strategy you feel suits you better, we'll be happy, to teach you. If you have questions, we have like 2, 3 minutes before the end of this session. If you have a question, so we can quickly address that. And if there's no question, we can, call it a day. Any question? Do we have a question? If you have a question, you can drop it in the chat box. Okay, it seems we do not have a question. So for those that are still interested in taking this trade, that is the entry. Check your 3 hours time frame, mark your support level, your stop loss level, and you can set your entry. But this is not a financial advice. This is just me giving a market insight. All right. So thank you guys for your time. It's been another amazing session. Join us again next month for a live trading session like this. And for those that will be joining us for any of our master classes, whether it's a group class or private class, you are welcome to join us. All right. So we'll call it a day from here. Thank you guys. Thanks for your time. Do enjoy the rest of your day. Bye.
Thank you very much. It was.
You're welcome.
Bye.